Hi, and welcome to Mondays with Marlo. We are so excited today to have Jean Chatzky with us. She's the finance expert of the Today Show. But everybody, the whole community, has questions. This is the time of year where spending is scary.
Absolutely.
Or everything we've done all year long looked pretty good, and now we're going to blow it right in December. So in January is going to be that awful month where we say, how could we have done this? So everybody wants to know how to get through the holidays and still be all together. So I know you have a lot of tips.
Well, hopefully we can stop people before they do too much damage.
Right.
So that we can send them into January feeling good and
Right.
refreshed about the new year and able to keep those New Year's resolutions, because so many people say, I just want to get my finances in order.
Right. Well, that's it. So let's see here. This is from Mark. He says, hi, Jean. I read somewhere you have tips for financial comfort. Would you share it?
Okay, so I have a 5-part philosophy, Mark, and it just is the way that you need to manage money in your life to be comfortable with it. Step 1 is you just have to make a decent living. Doesn't have to be outrageous, just has to be enough to pay your rent, pay your mortgage, make your car payment, go on vacation every once in a while. Step 2, and this is the one where people get into trouble, you have to spend less than you make. Spend less than you make consistently. Step 3, you take the money that you don't spend and you invest it. So it works just as hard for you as you work for yourself. Step 4, you protect this financial world that you're building, and that means an estate plan and the right kind of insurance for you, whether it's insuring your life or disability insurance. And finally, you got to give something away. Because especially this year, we know, this time of year, we know that you get a karma kickback when you give money away, unlike anything else.
That's right. That's great. Wonderful tips. I'm going to write those down. This is from Melissa. Hello, Melissa. Can you give me some tips on how to control and manage credit card spending and credit card payments?
Hi, Melissa.
Well, that's two different questions, isn't it?
It is. Let's take them one by one.
Okay, so
you need to understand that psychologically, you are more likely to spend money on your credit cards than you are on your debit cards, and on your debit cards than you are when you use cash. So if you really want to control your spending, you put all that plastic away and you just carry around really big bills. Because if you remember when you were a kid and somebody gave you a silver dollar, that silver dollar was really hard to break. And
Right.
today, as an adult, hundreds and 50s are still really hard to break. 20s are way too easy. So go to
Right.
the bank, get the big bills, put them in your wallet,
Well,
and call it
ATM
a day.
gives you 20s.
I know. So you got to actually go into the bank and talk to a teller and get the big bills, and you'll control it a little bit better. The other thing that really helps you control your spending is keeping track of it. So if you can get yourself to just carry around a notebook and write down everything you spend, it's like calories. You're going to start watching what you're doing, and you're going to be more careful as a result.
and you're going to be horrified.
Yes, a little horrified.
I've done that. And I said, what, are you kidding? In 2 days I've spent that much money? I can't believe it.
People they pull $100 out of the ATM, and you ask them where it went, they don't know. They don't know. So write it down. As far as those credit card payments are concerned, you want to make sure that you've got a credit card with the lowest interest rate possible. So if you can go to a website called lowcards.com and transfer your balance to a lowest interest rate card, it'll get you out of debt faster.
Oh, wow.
Yeah.
So do you know which cards those are?
They change all the time because interest rates change, but there is a comprehensive list, and you can tell the website whether you have a good credit score or not such a good credit score, and they'll point you in the right direction whether you need a rewards card or not.
That's great. This is from Vicky. Everybody says save, 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 but it's really hard. I know myself, and I know that I won't stop spending money on coffee in the morning and the gym and weekend trips. Are there any tips on how to save but not drastically cut back on the things you love to do? How do you save without feeling deprived?
You have to save before you spend. I mean, that's really the only way to do it. There's a reason that 401k savings plans work, and that's because we never see the money. And I have a money rule that says if you don't see it and you don't touch it, then you're not going to spend it. So save automatically before you have the chance to spend by having some money just swiped out of your checking account every single month and into a separate savings account where you know that you're not going to touch it. Internet banks are really good for this because quite often they don't come with ATM cards, so you actually have to go through a physical action of transferring the money out of that internet account into the brick and mortar account and getting it. It makes it harder to get at the money.
And how do you save when you say you swipe it out? What does that mean?
You arrange with your bank electronically to automatically debit your account, automatically take some money out of your checking account and move it over to the savings account before you have the opportunity to spend it. And then many people these days budget by just looking at the amount of money that's in their bank account when they bank online, and they think, okay, I have $575, that's what I'm allowed to spend. But if you can get the money that you want to save out of that balance, you're not as likely to spend it, and you're not as likely to feel deprived, which is what she wanted to be careful of.
You have to decide, though, how much you're going to take out of your check every month, right?
Right. And if you can aim to save at least 10% of what you're bringing in, you're going to be doing okay.
Good. This is from Tori. Can you offer 5 tips on how to pay off your debt? Thank you and
tips.
Help.
Okay, Tori, and help. Okay, 5 tips. First, you have to know how much debt you have, which means doing a tally. You have to know what interest rates those debts are charging you. And then you want to do something called debt stacking. There are websites out there that will help you with debt stacking. But you want to go through and you want to pay off your debt at the highest interest rate first, because that's the debt that's costing you the most money, while making the minimum payments on the rest. That's 3. We mentioned balance transfers before. If you can recharacterize or refinance any of your debts, which means transferring your balance to a lower interest rate credit card, refinancing your mortgage, refinancing your car loan, consolidating your student loans so that you've got lower interest rates, that's going to make a difference. And number 5, minimum payments are a huge, huge, huge trap. You got to get yourself paying more than the minimum that they ask you for, and that will get you out of debt much, much faster.
Yeah, that's exactly right.
Yeah.
This is from Slister45. Dear Miss Chatzky, my husband and I own a home that is in need of a lot of repairs. The kids are gone, and we don't need all this room. Our mortgage payment is like an albatross around our necks. We have a pretty decent retirement fund, but my husband is ill and wants to retire soon. He's 62, I'm 55. We are both working, but his job covers our major medical expenses. I don't have medical coverage. My question is, should we sell our home as is, or should we invest some of our retirement funds into fixing it up?
I wouldn't invest an awful lot of the retirement funds into fixing it up. I'd do a survey of the area. You may need to paint. Paint is cheap, and it actually makes a house look better and remove a lot of the clutter. If you've been there a long time, chances are you've got a lot of clutter. Just clearing it out, making it clean, making it white can make it much, much easier to sell. And you could even hire a low-cost staging company to come in and make it look great to help you sell it really, really quickly. Make sure you price it right, and that's the most important thing that you can do in order to move your home faster. But reading your letter, I think the best thing that you can possibly do for yourself is get out of that house as soon as you possibly can.
And that's not so easy to do right now.
It's not. It's really not, unfortunately. But homes are starting to move if they're priced right. You don't want to be above the market for your area, because then it'll just sit.
Right. This is from Detroit, Sylvia. Hello, Detroit. I've just gotten married, and I've heard so many horror stories about husbands and wives not checking in with each other about spending. I want to start my marriage right. What's a good plan for putting our lives together? Do you believe in a joint account, or do you think we should keep our money separate?
Well, I'm from Detroit. I was born there, so I want to make sure I get this one right. I actually think you need both. I think you need joint accounts and separate accounts, because having been married and having been divorced and having been married again, I know that people need a certain amount of financial autonomy. You need to be able to go out and buy something relatively, small that you want without asking for permission, and your husband needs to be able to do the same. Otherwise, you start feeling like each other's parents, and that's the least romantic thing in the world. So his, hers, and ours accounts, and you make sure that you take care of those joint expenses first. So figure out what you need to run the household and what you need to save for your joint goals. Fund those accounts, and whatever's left over you can have in your own.
I see. This is from Erica. Do you have any tips on how to manage and budget holiday gifts and spending? It's so easy to go overboard.
It's really easy
This
to
is,
go
I
overboard.
know, this is a big question. Let's really get a hold of
And
this.
I was just saying, I have to, in between here and my annual physical, which is later this afternoon, I have 3 more gifts to buy. And when we're in a rush is when we tend to really blow the budget. So before you even go to the store, figure out how much you have to spend. Figure out what that number is. Then divide it up among the people that you have to buy for so that you actually have a bottom line. You know, I'm buying Marlo a gift. It can cost $50 or it can cost $100, but you know where
it can't cost more than this.
I wish it could. I'm sorry. But, but then you go on the internet and you try to find those things that you buy for before you actually go to the stores, because it's very easy to comparison shop on the internet. You can look for coupons on the internet, and finally you go to the stores with a very good idea of what you're in there for. You can get in and out and done without blowing the budget.
Yeah. You have to do it beforehand.
Yeah, you really do.
Yeah.
You
and
really
separate them into categories.
Make sure if you go over on one person, you got to borrow from somebody else in order to take it back.
Right. What are 3 realistic, who is this from now? Oh, no name.
No name.
What are 3 realistic New Year's resolutions I can make to tackle my finances? Right now, I have $12,000 of debt. I make $43K per year plus bonus and some extra money I make babysitting. So what are 3 realistic New Year's resolutions I can make to tackle my finances?
She just needs one big one. You really just have to get rid of that credit card debt, which means you need a plan to get rid of that credit card debt. Again, like I said before, you want to stack the debt. So you want to know who's charging you the most for that debt. See if you can transfer the high interest rate cards down to lower interest rate cards, particularly if you already have the cards in your wallet and you've been paying on time. A lot of those credit card companies will allow you to do that. And then just come up with as much additional money as you can to put against those debts. The bonus dollars. You may very well want to throw the entire bonus against the credit card debt. If you get a tax refund, the average tax refund last year was $3,000. That would make a huge difference against that debt. And the reason the debt's so important is because average credit card interest rates right now are about 15%, which means on $10,000 of debt, you're paying $1,500 a year just to service that debt. This is costing you a huge amount of money. Chances are you're not going to get a better return investing your money unless you've got some sort of a 401k match. So I'd say prioritize the debt and get rid of it.
Right. This is live from Lisa. Hi, Lisa.
Hi, Lisa.
I took a ton of private loans to pay my college tuition, $130,000 worth to be exact. My loan repayment per month is outrageous, but I've been told by the loan company, Sally Mae, that there's nothing I can do to get the payment lowered. Is this true, or are they giving me the turnaround?
It's true. Unfortunately, private loans, Lisa, are really, really tough. What you can do in some cases is consolidate the debt, not with another student loan, but with some sort of personal loan. And if you've got parents who are willing to help you with this, perhaps they can co-sign in order to help you get a private personal loan, unsecured personal loan, at a lower interest rate than these private student loans. If not, you just want to work toward paying them off as quickly as you can.
$130,000
I know. It's really, we hear an awful lot about people who don't maximize the ability to take federal student loans, public student loans, before they tap into the private market. And it's really upsetting because federal student loans are much, much easier to deal with on the back end. They have a lot of different repayment plans to make things easier for people who have them. And Lisa, unfortunately, that's just not the case for you. So I'm sorry, but I hope that you have a really happy new year.
I know. This is from Marcy. I try so hard every year, but it seems like I just can't make ends meet around the holidays. How can I get a jump on holiday spending and not feel so squeezed come January?
That's a really, really good question.
Yes.
So 2 things, I think, for Marcy. The first is, there was this great study in the New York Times last week out of Stanford University that talked about how people feel about the gifts that they receive. And they compared people who got really expensive gifts with people who got gifts that didn't cost as much, and there was no difference in the appreciation level among the recipients. So take that to heart as somebody who's giving gifts. You don't have to spend a ton of money. Buy something that's thoughtful, but within your price range. Don't go crazy. The other thing is, buy all year long. Things go on sale all year long, and if you get yourself to just pick things up throughout the year, you'll be done, which is really nice come holiday season, but you'll also be able to know that you've already paid for these things because you've paid for them with the bills that have been rolling through the year.
My sister does that. She starts in August buying presents. You know, after 9/11, my friends and I just felt like we couldn't really feel justified to spend a lot of money that Christmas. So we said to all of our friends, we said, let's only spend $25 on our present this year. And so I went to Target and found these great, well, you can't see them, but those great red hurricanes. They cost $25. And I bought them for all my friends. I bought several for myself, and everybody loves them.
They're great.
And they were great. And Target's a great, I mean, I'm not sponsored by Target, but it's just the idea of saying, okay, we can only spend $25. And if you tell everybody to do it, it's very imaginative what you come up with.
It absolutely
really is. Yeah. And my family and I have been trying to do that.
Yeah, I was in the West Elm store earlier, and we're not sponsored by them either. But again, they have thing after thing after thing that just it's $20, $12, many things that I'd be very happy to get.
And they're fun things. Do you recommend using your debit card for purchases or cash? I think you did say that already.
We talked about it. That actually most people spend using their debit card a lot more freely than they spend using cash. But for this person, she is saying, I take out cash and I spend it quickly. So the most important thing that you can know when it comes to your money is yourself. I like to say that personal finance is a lot more personal than it is finance.
Right.
You know, it really comes down to who you are and what's inside and how you feel and how you behave. And if you know your behavior, if you know you can't keep your fingers off the Reese's peanut butter cups, you're not going to keep the Reese's peanut butter cups in the house, and you're not going to keep the cash in your wallet.
Right. This is from Slope. When I divorced my husband several years ago, I had to take on half of our credit card debt load. I'll be finished paying off all the bills by next September. What steps should I then take to successfully reestablish my credit?
Well, if you've been paying off those bills in good order and you've been paying them off consistently, your credit may actually be fine, even if you had a lot of debt. The first thing that you want to do is check your credit report, which you can do for free at annualcreditreport.com. At the same time, you may want to pay in order to pull a credit score from myfico.com or one of the credit bureaus. And then the most important thing that you can do to rebuild your credit is to just be consistent. Pay your bills on time. Don't take on more debt in the form of new credit cards. You want to keep the utilization on your credit cards, which means the percentage of the debt that you have available to you that you're actually using, to between 10 and 30%. And that's it. And if you can't get credit, go to a website called cardweb.com. Look at the list of secured credit cards. Take out a secured credit card. You'll have to put a deposit into that bank in order to support your credit limit, but other than that, you'll be good to go.
Wow, you know every single website.
You know what? I know the websites in this area because I've been writing about it for a really long time.
That's great. This is live from Storm. My father recently died, and my mother's completely lost when it comes to finances. Do you have any suggestions for how I can help her get started? She's bright and capable. She just never had to take care of finances before.
Yeah. Oh, I'm really, really sorry about your dad. And this happened to me a few years back. And my mother actually did handle a lot of the finances in our family, and she taught me a lot. But she very much missed having my father as a sounding board. And so together we went out and we interviewed financial advisors, and we found her a financial advisor.
That's great.
And having a financial advisor these days is much more democratic than it used to be. You don't have to have somebody that you talk to all the time, or that you pay a percentage of assets under management. A lot of these people are willing to charge by the hour. You just need somebody who can sort of look at your entire picture, that your mother feels very comfortable talking to and opening up to, and that can help her get going.
That's great. And that's happens to a lot of women. My mother was that same way.
Yeah.
My father had done everything. When he died, she said, am I going to be okay? Can I keep my house? She had no idea. It was very sad. This is live from Pam. Hi, Pam. Hi, Jean. We live in the same house my husband grew up in and are almost done with our mortgage payments. But my husband wants to move sooner than later because the neighborhood has gotten bad. There's a lot of shootings. Ooh. Do you advise against buying a new house while renting the old one out for extra money? That's what my husband is suggesting.
No, I don't advise against that at all. Rents have been so strong these days that may be a really good way to pick up some extra money, at least until the real estate market comes back in certain pockets of the world. I mean, in this particular neighborhood, if it's gotten bad, you have to ask yourself, is it going to get worse? Because if it's going to get worse, you may actually want to sell sooner rather than later. The other question to ask yourself is whether you want to be a landlord. Being a landlord is a lot of work. If you're not up for fixing the plumbing in the middle of the night, then you've got to find somebody else who's going to come in and manage that property for you. But it doesn't sound like a bad idea to me at all.
No, very good. This is live from Samantha. At what age should you start teaching your kids about money and give them money responsibilities? And also, at what age should they get their own bank account and credit card? My kids are 9, 11, and 14, and I want them to grow up knowing what a dollar is worth, but not sure what age I should start.
Start now. Start now with 9, 11, and 14. And I think that the best way to teach your kids about money is with an allowance. But I also think that most parents don't do allowance correctly. I think an allowance should have to take the place of certain things that you used to buy for your children but are now going to be out of their money and out of their pocket. And it has to be things that they want. And you don't want to give them enough to have an unlimited quantity of these things. You want them to have to budget for these things. You want them to have to work if they want more of those things than you're willing to buy. So use that list to come up with what you think is an appropriate amount to start giving your kids. And then as they get older, my kids are 14 and 17, but for the last couple of years, they've been on electronic allowance, which means I opened up student checking accounts for them at my bank. Their money, their allowance goes into their accounts automatically every week. It's just moved through those electronic transfers that we talked about before, which solves the problem of them asking for your allowance and you having to say, I don't have any cash, I'll give it to you later. And then all of a sudden they're like, I need 5 weeks. And you think, yes, you're right. And I still don't have the cash. And this gets rid of that problem. But it also teaches them how to use a debit card because debit cards come with these student checking accounts and they can start to learn how to bank electronically and how to monitor their own balances online, which is how they'll do it when they go off to college. So it's really important.
Oh, that's great. Amy, what is a reverse mortgage and when would you get one?
Okay, Amy, a reverse mortgage is just like it sounds. Essentially, the bank gives you money back for your home while you're still living in it. You can only get a reverse mortgage when you're 62 years old or older. And you generally only want one if you know that you're going to be in that house either forever or for a really, really long time. Because when the house eventually sells, then there's no equity to support you to take you, or
What's
there's less
reverse
equity.
about it?
Well, if you are buying a house, you are making the mortgage payments.
Right.
In this situation, the bank is essentially loaning you back the money for the equity in that house.
I see.
They've reversed the process, and you'll either get the money as a lump sum, or you'll get it as a line of credit, or you'll get it month by month by month by month. That's sort of an annuity that can last as long as you live. As you get older, the payout from a reverse mortgage becomes greater. So the same house for an 80-year-old is more valuable than for a 70-year-old because they think that 80-year-old will be around to live in that house for fewer years.
Right,
and of course, they're generally right about that. Go to the website of AARP.org. AARP, reverse mortgages are really complicated. They tend to be expensive. They're better than they used to be, but they're still not perfect. And AARP has a really good primer on reverse mortgages that anybody who is thinking of taking one for them or for their parents should really read.
That's great. This is live from Rick. What's your recommendation for moving a 401k from a previous employer?
I can't tell, Rick, from your question if you're trying to move it into your new employer's plan, which is actually really simple, or if you're rolling into an IRA. If you're rolling into an IRA, which is I think what this question is asking, I tend to go for administrative ease. So you don't want to have accounts all over the place. You want to have an account at a place where the fees tend to be low, where there's a great selection. You can buy all the different investments that you want, but probably where your current 401k is based, so that if you go online to check your balances, you can sort of find everything in one place. That's how I've done it when I've moved my prior 401ks. I've just moved them to the place where my current 401k is based, so that everything's there when I sign on.
Yeah, that's good. This is live from Maria. My 14-year-old daughter just inherited about $5,000 from a relative. It's currently in a savings account, but I don't have a clue how to start investing it for her. And when should I involve her in the process?
Great question. I would involve her in the process immediately. I mean, let her know that this money is hers and decide what the money is for. You can't invest the money until you understand what the money is for, because if it's, for example, for college, she's 14 years old, that's 3.5, 4 years out. You don't want to put that money at risk. You want to put that money someplace where it will be protected, perhaps grow a little but not lose,
right,
so that she can use it for that. If it's for retirement, then we're talking about a truly, long-term proposition, and you might want to invest it in a broad market index or in a particular stock that she's interested in. Opportunities like this, if you think that you've got a child who is a really possibly interested investor, somebody who'd want to get in and pick their own stocks and their own companies, this is a great opportunity to help her get going.
Right, absolutely. This is from Jean Littacote. Are there any legitimate business loans or grants available for entrepreneurs these days, and who would be the best to contact?
It's hard. It's especially for small businesses, the credit out there, the funding out there is not what it used to be. I'd go through the Small Business Administration and see if they can hook you up with a lender who might be able to help in your particular scenario.
Yeah. That has to be a tricky one.
Yeah, you know what it is. It's just the funding for a lot of these things is not what it used to be.
This is from Stacy. What are some of the biggest ways to save money?
Okay, well, we talked already about not spending.
That's right, and taking it out of your check, too.
Yeah, about automatic transfers. I think the other really big way to save money is to make sure that you know what you're saving for. It's hard to save if you're just trying to save for retirement. But if you know that retirement for you looks like a beach house, or that it is, that you can picture it and quantify it and how much it's going to cost, you're much more likely to be able to put money away for that, because all of a sudden it becomes real to you. So that's what I would focus on. Have a goal and then work toward achieving that goal. And don't try to save everything all at once. When we talk about big goals, whether we're talking about losing a ton of weight or running a marathon, you can't get there by reaching for the 26 miles. You get there by reaching from 5 miles to 6 miles to 7. So break that big goal down into benchmarks that you can actually hit, and allow yourself to feel good about hitting the benchmarks.
Right. Let's see now. There's so many.
We're getting a lot of questions.
We have so many that I'm trying to pick out the ones that I think will be the most interesting for so many people. This is live from Maggie. Hi, Maggie. I'm 56 and could easily downsize. If I sell my big house and move into a condo, I'd make money. But in the long run, the house will appreciate more, right? And then I'd be selling it at a bad price. Do you have a recommendation?
Well, I don't know that in the long run the house will appreciate more than the condo, because I don't know where the condo is. I don't know what the house looks like. I don't know what the house's neighborhood is. It's if I do like the idea of downsizing into retirement.
Yes.
I think being cash rich in retirement, and Maggie didn't say when she was thinking about retiring, and you could possibly not want to retire for another 15, 20 years. But I like the idea of having additional cash heading into that period of your life, because I think it makes you flexible. I think it gives you the ability to do what you want to do when you want to do it. And so if downsizing allows you to make money on that piece of real estate, that house, which by the way is really hard to do these days, and put some money away so that then you can afford your other dreams, I think that's fine. It sounds like you don't want to live in that condo, so that's probably not such a great option either. Figure out a better option where you're going to be happy. At 56, you're really young, so you want to make sure that you enjoy those years.
I agree. This is from Storm. Hi, Jean. Do you have any advice or tips on how to organize your finances if you work freelance?
I get this question a lot, and that's because so many people these days are working freelance, which means that they're not getting a regular salary every other week.
Right.
The trick is to think about it as if you were getting a regular salary every other week and to budget that way. And in order to do that, you have to back into the numbers. So figure out how much you've earned over the last 3 months or 6 months, whatever sort of representative of the most consistency that you can muster. Divide it so that you know what your monthly take home is. And then make sure that you live on that monthly take home. You don't spend more than that when you're having a good month. And when you're having a bad month, you'll have the additional cash to tide you through.
Susie Orman said something interesting on this show one time. Somebody was talking about living within their means, and she said, don't live within your means. Live below your means.
Absolutely.
Do you agree?
Well, because we talked about saving 10%, and that's what it means. You have to make sure you put something away for tomorrow. Susie's right.
Yeah. This is from NHJRO4545. What are your thoughts? What a name. What are your thoughts on online savings accounts? Is it worth it to open one for the higher APY? What's an APY?
And you average percentage yield, and it's the interest rate. And yeah, absolutely, but you have to realize, as we said before, some of these online savings accounts make it a little harder to get at your money. And so if what you really want is liquidity, the ability to get at your money in 30 seconds, that online savings account might not provide it. But they do tend to offer higher interest rates. And also take a look, there are higher interest rate checking accounts now. They only allow you to deposit $25,000 to $50,000, but sometimes the interest rates, particularly for people who use a debit card very, very regularly, are 300 or 400% better than what you can get in a bank. Yeah,
great.
Regular bank.
This is from Betty. I tend to vacation a lot. Do you have any tips on how to budget when planning a vacation?
Sure. Know what the vacation's going to cost. Price out that vacation, and not just the plane ticket and the hotel, but the plane ticket and the hotel and the meals and the taxi and the tips and everything. And then save the money in advance so that you're not just putting it on a credit card and paying for it after, but you're actually saving for it before.
So you have your little piece of...
Yeah, it's kind of like a Christmas club, but for your vacation. Right? You know that it's going to cost $5,000, so you save $100 a week for a year. Right. And then you have it before you go.
Right, that's great. One last question. I'm getting the hook here. We still have so many questions, and I'm trying to figure out which is the one that'll mean the most to more people. This is live from Dan. My job doesn't offer a 401k. I opened an IRA retirement account, but that has a limit of $5,000 per year. What are other options for long-term investments for an individual? I can't open a 401k if it's not through a company I work for.
That's absolutely correct.
Right.
If you have self-employment income in addition to your regular income, you can open a SEP IRA, which allows you to deposit more than a traditional IRA. If you're saving for college, you can put some money into a 529 plan. You can put some money in a health savings account if that's offered through your company. And otherwise, you can just put some money in a discretionary brokerage account and know that the amount that you save is just going to pile on, and it's always worth saving, even if you can't save tax deferred.
Okay, I'm just going to try to squeeze in 2 more questions, okay? This is from Ali Bibi. I have sold stock 2 months ago. Where can I place these funds in order to not pay taxes now?
You can't.
I'm over 61. I know.
You already sold the stock. If you received a capital gain, you're going to pay taxes. You're on the hook this year unless you had losses to correspond with those gains. And if you did, you have until the end of the year to sell those corresponding losers in order to match head-to-head, dollar for dollar with your gains, and that'll get you off the hook.
Okay, and this is from Robin. What's your feeling on gambling? Yes, no, maybe, never. I go to Vegas once a year with girlfriends. Last year I lost $500 and it felt awful.
I am so with you, Robin. I went to Vegas a few months ago with my husband, and I hate the feeling of losing.
I'm such a poor loser. Me too.
But I like to play every once in a while. So we played a little craps. We were up about $50. We walked away. We felt fine.
No, I know. I lost a couple $100 one year, and it really depressed me. And I thought, I'm a poor loser. This is not my kind of game.
I think if you think about it as the cost of dinner, right? This is the cost of entertainment. I have $100 that I would have spent on a theater ticket, but I'm not going to spend it on a theater ticket. Instead, gambling is going to be my evening entertainment.
Right.
Once the 100 is gone, it's gone.
Right. Well, thank you. You just know so much.
Oh my goodness, this was fun. I can't believe we've been on that long already.
Yes, thank you everybody for coming today. I hope this helps your holiday spending so that you have a good January. You can't have a good January if you don't have a smart December. So thank you, Jean, for helping us with that.
My pleasure.
And we'll see you next week.
Bye.